Hello, everybody. So here we go again, and I'm sad to say, but the topic of this video is what's going on at First Republic Bank. And here we go again because it's down 44% in one day. As yesterday, we've learned that they've lost over $100 billion in deposits after the SVB collapse, Silicon Valley Bank collapse. From what I saw, 104.5 billions to be exact is how many deposits flowed out of First Republic Bank, FRC. But what does that mean for the stock price of this company? Well, if you look, down almost 44% at the time of recording of this video. This is now a company that has a $1.6 billion market cap. You know, it's a stunning fall, absolutely a stunning fall. And perhaps, you know, and this is unfortunate, but perhaps this is not surprising. Perhaps this is not surprising that, you know, more than $100 billion in deposit flowed out. This is not surprising that the depositors of First Republic Bank would move their money away. Because as a reminder, and FRC, right, First Republic is a big bank in California. As Californians saw the Silicon Valley Bank collapse, we have to realize that, and I complained about this on the channel, we have to realize that mixed messages were broadcasted. And I appreciate the transparency from the Treasury, but they were very, very important messages that were put. If you remember, during the collapse of Silicon Valley banks, you had Janet Yellen on Face the Nation, and she was saying, she rules out bailout for SVB. We're not going to do that again. There's not going to be bailouts again. So, of course, if you're a depositor and you have money with First Republic and you hear there's not going to be bailouts again and you hear there's fear, you want to move your money out. And then 3 days later, you may remember that on the Congress floor, on Congress, she was by a senator from Oklahoma. The senator from Oklahoma was asking, are my banks in Oklahoma safe? And she essentially said, you know, she used a very long language, multiple sentences, but essentially what he says is that she can only say that banks are safe when the bank is deemed systemic. Systemic banks are safe, i.e. the big four, right? JPMorgan, Wells Fargo, Citibank. These banks are safe. This type of banks are safe. Bank of America is the fourth one. Treasuries are safe, right? If you buy treasuries, that is safe. But she's being honest. You know, she's being honest. If it's not a systemic bank, you know, that's the FDIC, and all of the funds are not safe. She said it twice in a row. So if you are a customer of First Republic Bank, your bank is not in that list. Obviously, you're going to move your money. It's a rational thing to do. People at First Republic are rational, and this is honesty. This is honesty, and I appreciate the transparency. But of course, given the rationality of economic actors and given the statements of the treasuries, you may remember this video that I made on the channel. I was upset because I was saying one new rate hike. They raised rates 2 weeks after the SVB collapse. They raised rates, even though there were a lot of calls, not just me, but to stop the hikes immediately. They raised rates, and obviously, the more you hike, the more there's rate hikes, you're obviously going to trigger bigger unrealized losses for banks, right? And you're going to create a much bigger incentive for customers to move away from cash at banks and buy treasuries, right? We saw Apple recently with a new savings account. Anyways, so customers have an incentive to move away from banks as the rate hikes continue. And I was, flabbergasted that they actually went ahead and did another rate hike. And, this is not surprising. This is just rationality. Something is breaking again. In my view, it seems like it's the case. And that's the big news that we've heard. It's Bloomberg reported that, these Bloomberg terminals, the news travel really fast on Bloomberg terminals. And they reported that First Republic is looking to sell $100 billion worth of loans and securities. And obviously, right now, in the tight environment, nobody's buying those. There's very few people buying those. We're going to have to sell those at a major discount, maybe 70 cents on the dollar at a major discount. I don't know, maybe worse, maybe better. But this is a pretty bad news, and this bad news, is eerily similar in my view to the news that triggered the SVB collapse, where they announced that they were starting to sell stock to cope with cash burn That was on March 9. That was before the collapse. They made this announcement, and the stock had a very similar drop to the FRC's drop right now. It's not different, not too different, right? Except they're trying to sell treasuries, trying to sell their securities there, First Republic, and there they were trying to sell stock. In both cases, in this environment, I am not sure they're going to be able to do this. And, you know, another point is FRC First Republic, right? They may have reached the maximum amount they can already borrow under the new program, and under the BTFP program, they may have reached their max. And you know, one more thing that really concerns me here, one point of concern is that First Republic already got liquidity, especially in the wake of the SVB crisis. They got a $30 billion lifeline, right? A deposit from the big four, right? So JPMorgan, Citigroup, Bank of America, and Wells Fargo, they each poured $5 billion each, and other banks also poured money into First Republic. So they essentially got a lifeline, or not a bailout. You know, the word bailout, just like the word QE, is never going to be used again. But let's call it a lifeline. They got a $30 billion lifeline. And that show of confidence from the Fed, from the major bank, is exactly what First Republic Bank needed to halt the removal of deposit by its customer. It's exactly what it needed. Were it not for the fact that this classic confidence bands crisis was also met with statements. You had contradicting statements. You had statements of strength from the big banks. Yes, we're putting $5 billion of our money in FRC. JPMorgan, we're putting $5 billion in First Republic. You know, we trust the bank. The big banks are sending a signal of strength, and then at the same time, you have a Treasury secretary who's saying banks' deposits, uninsured deposits, are not going to be protected unless the bank is systemic. So there is this conflicting, like I said, this conflicting information as a customer, where you can't blame the customers for withdrawing the money and placing it in systemically important banks, and you can't really blame the government for being transparent, because they told you they were not going to bail out banks that were not unsystemic, so that were not systemic. So it seems like what happened at SVB was a one-time thing. I don't know. We'll see over the next few days. But anyways, let me end on a word of positivity. I want to end on the bright side. So today, I've seen a lot of discussion on Twitter and even on the CNBC set today that a receivership could be put in place. And, you know, of course, they would talk about the FDIC receivership right now. Obviously, you know, it gets a lot of views, and you know, the media thrives on fear. So, of course, they would talk about that. But no matter why we're talking about this would be nonetheless a reassuring news for people who have under 250 at FRC. So this is still on the bright side, even though, you know, that bank, First Republic, is not there yet. But the fact that they're bringing this up, that there may be receivership, I think is still a news on the bright side. And another positive takeaway to take out of this is that the probability of a 25 basis point rate hike on May 3rd, right, that the market was expecting tremendously, that probability has dropped really quickly. So I checked it on Monday morning. It was 89.1% on Monday morning on the FedWatch tool. The probability is now 70.7%. So depending on how this goes over the next few days, that probability may drop even further, and maybe the Fed this time will stop the rate hikes, because whenever the Fed rates hike, the unrealized losses get deeper and deeper, and the customers of banks have greater and greater incentive to go to the big banks and to buy treasuries. So I'm ending this video on two positive notes and two positive points here, but this is pretty concerning. This is why the market crashed indiscriminately today. So many great stocks that have nothing to do with banking crisis today were way down. So it's a buying opportunity for a lot of stocks that we're way down in tech, you know, that had nothing to do with this. But anyways, it's somewhat concerning, and that's why my title of sadness is Here We Go Again. Here we go again. So anyways, this was not investment advice. This is just entertainment. I hope this video was helpful and entertaining, of course. Please like, please subscribe. Appreciate all of the comments. Thank you, and have a wonderful day.